The Taxpert Incorporation app gives a quick and easy way of looking at the net income and the tax and national insurance implications of changing from being a sole trader to trading through your own limited company. Any of the yellow fields can be input. So if I start by putting in trading profits of, let's say, £75,000, we can see straight away that the net income will be 53,196. The app has calculated the class 4, the class 2 national insurance, the tax, and we can see that if you were to incorporate, then the saving from incorporation would be £7,554. Now that, however, is on the basis that we're simply retaining the profits in the company and have not taken any salary or interest or dividends from the company. But if I were to click this optimize button, then it'll tell me what the optimal combination of salary and dividend is, and that'll give a better representation of how we would save money from incorporating. And this uses an add-in called Solver, which works in the background of Excel. Most of you will have it already installed. If not, then you simply install it as an add-in. And when it's done its calculations, it shows that the optimal combination would be a salary of 9,500. Well, that of course is the earnings threshold for the current tax year. For secondary class 1, there will be a small amount of primary, and then the rest of the profit we pay out as a dividend. And on the basis of a 100% distribution of the profit, we then end up with a saving from incorporation of 2,562. Now, in this example, I haven't added in any other income, but you can see down here, you can add in other earnings. That'll be employment income from a secondary employment, other non-savings income like rental income, gross interest, and other dividend income. So that gives it a degree of flexibility. Lower down, we have got, as in our other apps, the two questions: are you yet of state pension age? Answer no here. And are you a Scottish taxpayer? And let me just change that. Keep an eye on this figure for saving through incorporation. If this was somebody already of state pension age, then in fact they would be worse off through incorporating. Now the reason for that is that the class 4 and class 2 national insurance liabilities have disappeared. So once you are of state pension age, then, well, at least in the year following, you will not be liable for either class 2 or class 4, and so there's no saving in terms of those by incorporating. You're actually worse off. But let me put that back to no. Most of you will be using this for those that have not yet reached state pension age. I wonder what the effect would be on a Scottish taxpayer. And of course, the Scottish tax rates are very different for employment income and self-employment income. And because of the higher rates attaching to employment and self-employment income, I would expect a Scottish taxpayer to be even better off from incorporating. So if I change the no to I, then as I forecast, the Scottish taxpayer would actually save a massive £4,354 from incorporating. And if I just switch back, well, actually before I switch back, just have a look at this. The sole trader in Scotland with 75,000 would have net income of 51,405. Whereas the sole trader in the rest of the UK, instead of 51,405, would have 53,196. So a significant additional cost, and that's because the 75,000 of trading profits would be subject at the top rate, the higher rate of tax on the excess over 50,000 to 41% instead of 40%. And also within the basic rate band, there's higher tax. Whereas if you're trading through a company, then you've only got the 9,500 salary, and in fact at that level your tax on the salary will be lower if you're Scottish. If I have a look down here where you've got a breakdown of the net income from the company, if you look at the tax figure, it's going to be 0 in each case because of the personal allowance. So let's just ignore that for the time being. Well, as with all of our other apps, you can access full workings. If I click on this button for workings, then it takes me to the workings for the sole trader, and you can see how the personal allowance of 12,500 is allocated and how the other allowances and reliefs work. And similarly, we've got a page for workings where it's coming out of the company. So you've got the full detail so that you can check the results. And that's about it. The calculations are very complicated. The actual operation and result is really quite simple. There are some quite surprising results. Let me just show one other feature. I could in fact make this even better. Suppose that the limited company is financed by a director's loan of 100,000 and I put in interest of 6,000. I haven't clicked return yet, but what will happen is that the saving from incorporation, you can see it's 2,562 at the moment. Well, in order to make it comparable, I'm going to change the dividend figure here to 48,115. So in each case, we're getting the same zero retained profit in the company. And that saving of about 2,500, I think it was, has gone up by about £1,200 to 3,744. So there is that possibility from incorporating a sole trader of saving over £300 a month, but £100 a month of that was from when I put in that interest figure. And again, if I change it to a Scottish taxpayer, then it's going to be even better at 5,500. So not a bad little app for working out all of the different combinations. And then once we've done that, if we want to move on to the next client, well, we can reset to 0. Are you sure? Yes. And we start again.